The S&P 500 and the Nasdaq 100. We have a lot to talk about on the day. We had some earnings just come out. AMD, Snapchat for some reason usually moves the market more than some of the biggest names in the market. We need to talk about what's happening in the Fed meeting tomorrow. That's probably the most important. We have a lot of hints, in my opinion, that are going to tell us exactly what we need to know. So let's not waste any time. Let's get to it. Now, before we get into any of that, to tell you right now, I recommend you like and subscribe. Now, liking, that's totally on your part. If you get anything out of the video, then consider hitting the thumbs up. It helps out. But subscribing to the channel. Every single day, I give you the unbiased point of view. I go live every single day, 10:30 a.m. Central, to give you some free plays and stocks that we're looking at for day trading here as well. But again, that's the channel essentially and what we do. As we get back though, we need to look a little bit at the charts. We are going to look at the charts, and I want to just point out a few things and just talk about where we're at. And before we get to the notion of, hey, we're bearish, guys, we're bearish, we have to go down. Let me tell you one thing. We never have to do anything. And usually when you get the most confident in some sort of play or direction of the market, specifically here in a bear trend, it's usually when you get caught. So let's go over a few things. Now, I'm going to go over the bad news first. This morning we had consumer confidence. And this is one of the first consumer confidence data pulls that we've missed or come below expectations. Now, what I do want to read you, and this is directly, I'll have this in the description down below or the first comment. Consumers' assessment of the present economic and labor market conditions improved at the start of 2023. However, the expectations index retreated in January, reflecting their concerns about the economy over the next 6 months. Consumers were less upbeat about the short-term outlook for jobs. Now, this is a go figure, right? We're at 3.2%. Can unemployment get any lower? We've talked about this. This is the red flag area of the market, unemployment and inflation data regarding what's happening with employment and cost of living. Now, they also expect business conditions to worsen in the near term. Despite that, consumers expect their incomes to remain relatively stable in the months ahead. Meanwhile, purchasing plans for autos and appliances held steady, but few customers are planning to buy a home, new or existing. Fun fact, that number did go up. We remember we went over, the market looked really bullish at the end of last week when we got that home sales data that went up about 2% month over month. Consumers' expectations for inflation ticked up slightly from 6.6 to 6.8% over the next 12 months, but inflation expectations are still down from its peak of 7.9 last seen in June. A lot to go over there. Now, when we look at that, what does that mean? For me, I think we're starting to see a little bit of disbelief in the market. I'm going to tell you right now. As we look at these charts and, we go back to the Nasdaq, it's a little bit of, I don't know, a little bit too good to be true, right? It's a little too good to be true, to say the least. We can see the bottom and we can see the top of this channel. It's a straight up channel. So if anyone's saying, hey, you're in a wedge, you're in a bear, no, you're not in any of those types of things. You're in a clear, just channel to the upside. You bounce and just go back and forth here on the daily chart. It's really easy. And honestly, it's kind of the most beautiful price action we've had to the upside, at least since last June. So a little bit deeper. I think this is one of the biggest things we need to be looking at. Now, going into Powell talking tomorrow, I'm going to give you my opinion on what I believe he's going to be saying and the rate hike to come. Now, if we look here, this was the interesting part of today. Employment cost index, employment wages. Now, what did we just see from consumer confidence? Despite that, consumers expect their incomes to remain relatively stable in the months ahead. So they're not, this is just bizarre to me. So people are concerned for their short-term outlook for their jobs, but they expect to make the same amount. Can you see the issue? So we're afraid that we might lose our jobs, but we should be making the same amount. So on the long-term thesis of downside, everything's still there. Okay. As we look at, is the bottom in? I don't believe it's in. Personally, I just don't. I think we still have another downside push ahead of us. And I think we're going to see inflation reignite, if you will. I think that will come. Do I think that starts tomorrow, though? That's the question. And I don't really think so. So when we dive back into this, though, what do we look at with wages? What is the Fed worried about? People keep saying, well, Tyler, the Fed, they're going to come out tomorrow and tell you that the market is just too strong. Okay. Now, what has the Fed said about the market when it's too strong? Okay. What have they said? If we look back at previous instances, if you've been here on the channel for any time, which we go over this every single time, so you know what to expect, The Fed continues to come out and says the market and the labor market specifically actually can be used as a tool to make it easier for us to do our tightening, okay? They still have to sell off equities, and then they also still have to tighten more when it comes to these rates. So what did they say? They said if the market's performing good, then we're not crashing and we're not theoretically in a recession, okay? That's the Fed's terminology and thinking, right? So if the market's going up while they're tightening, they're like, Godspeed, this is great. We don't look that bad. If the market continues to go up, we're doing our job. We told them we're not gonna cut rates until 2024, and it might be quarter two in 2024 now, which we've noticed that, right? The Fed went from 2023 Q4 to Q1 2024, and that's moving. So what do we know? We know for sure they're not going to be cutting rates in 2023 this year. So at least 12 months, we're going to be sitting where we're at minimum, unless they just keep raising, which they probably will, right? We're probably going to get a little bit above 5%. Terminal rate, it's looking like 5% right now coming into the next meeting. So what we're looking at, about 0.25 and probably another 0.25, okay? Now, as we look at that, we're kind of being fed of what's the worst that can happen from this Fed. And that's the big issue of when this inflation starts to reignite. Unless the Fed comes out tomorrow, which I don't believe they will, I think they're going to start harping on some of these big things we've seen. The employment cost going down. This is good for the market. You need this to go down. You need wages to drop, okay? If unemployment's staying where it's at and it's not going up, which you need unemployment to go up, you at least got to see wages go down. And this is a step in the right direction. That's why the market, when this data came out at 8:30, went up. That's what happened. You started bouncing almost 200 points on the S&P or on the Nasdaq, and then a few points on the S&P. I didn't really track the S&P as much as I did the Nasdaq. Okay, so I want that to be very clear. So going into this meeting, I don't expect anything crazy. Now I'm going to tell you right now, if you get a 0.5 hike, you're really bad. You're really bad off. You're going to see a lot of downside, okay? I'm not going to say 52-week lows immediately, but you probably are on the track. If you come up 0.25, I don't necessarily think you just skyrocket up. I'm going to tell you that right now. I don't see that happening. But I do believe you might get a little bit of momentum, but it's all going to come down to what the Fed says regarding the state of inflation. If they say, and they stay with this same thesis of right now it's a balancing act and it's working, right? That's what they've been saying. Powell continues to say since November that what they're doing is working and the data is proving and showing, good notes. And then we've also seen some of the most bearish and hawkish Fed members like Kashikari come out and say we might have peaked on inflation. And so these are good things you want to hear and good things you want to see if you want to be a bull in the market, okay? So looking right now, let's talk about where we're at, where we're going, what to expect. Now, we can see that clear channel we're in. And if you look and ask me, this is the daily time frame on Nasdaq. And why do we look at indexes specifically and why do we watch them so much? Because we don't take any day trades unless the indexes line up with our thesis. What does that mean? So if we are looking for upside on, let's say, Target, like one of our most bullish names out there, or one of my new favorites, Boeing, I got a lot to show you on Boeing today, then we're not looking to trade those if the indexes don't side with us. Why? Because we don't counter the trend. If you stay with the trend, you reduce your risk. And overall, what's our goal here? It's to reduce our risk at all costs. Because if you can reduce your risk and maximize your reward, you're a winning trader. The end, point blank, period. So if we look here, in my opinion, you are forming on the daily time frame. It's a clear bull flag right now on the daily time frame. On top of that, where are we at? This is your 200 daily SMA. And I'm going to piss people off with this video. I already know. But guess what? That's what I do, right? You come to the channel because Tyler doesn't lie to you. He tells you what you need to hear, not what you want to hear, right? If you want to hear something you want to hear, then go to someone else's channel. I don't really care. Unsubscribe if you got to, right? It happens every day. Go read some of the comments. You're going to get some pretty mean comments. People saying, well, Tyler, we got to go down. They've been telling me we got to go down since 11.6. And spoiler alert, those people are down another 600 points on the market. So let's really quickly dive in to see what we're looking at here. So I'm going to go here to the daily time frame. We're going to look at the daily really quick. And I just want to get a quick zoom out. So if we look here at the daily time frame, you've been below and you have not held one daily candle above the 200 SMA going all the way to last year of January 21st, and over a year. And now going into this meeting, you're getting a bull flag. Now, again, I'm going to tell you right now, technicals do not matter over fundamentals on this week. I'm going to tell you right now, they don't. Okay. We can have the best setup, the best trades. We can have the best outlook, whatever we want. But I'm going to tell you now, if you come out and the Fed takes control and they say, and they're hawks, and they're like, look, we got a long way to go. We're not hiking rates till 2025. We're doing a 0.5 hike. You're going to drop, point blank period. But that's what I'm looking at now. Now I'm going to tell you also, what did I say yesterday? Did I say that the Fed meeting was the most important? No, I do not believe the Fed minutes is the most important aspect of trading today or this week. I believe Thursday is. Now, Wednesday, we have Meta earnings. Those are going to be awesome. It's going to be cool. But I'm telling you, Amazon, Apple, Alphabet, that's where my eyes are at right now. Nothing else matters. If we're looking at the Fed meeting, we know they're going to come out 0.25. We don't really care what they say because 9 out of 10 times they just say crap, and they say we really don't know what's going to happen with inflation and we don't know when it's going to drop. So they're not too big of helpers when we look at the market. But what we do know is if Apple reports bad, the market's going to get destroyed based on what happened last earnings. We know if Amazon reports bad, it's not good either, right? So these are things we know, right? Those are facts. We know that the market's going to react. Even if the Fed comes out tomorrow and says, look, guys, we're going to do a 0.25 hike, and we love the way the market's moving. We're going to start reducing rates more, which I believe they're going to. I believe by the summer, we're going to stop. We're not going to have any more rate hikes, probably a 0.2, 0.25 again, and then done after that for the time being to see how the data moves, right? But even if that comes out, the best outlook, I still believe Apple and Amazon could destroy the market. I'm going to tell you that right now. So you got to be watching those. Though these are the big factors. You're going to get some volatility tomorrow and then maybe the beginning of Thursday. But this is what matters. All eyes, laser focused. You really can't be, you got to be careful with swing trades until this is done. Okay. Now, I don't want to spend a majority of this video going over the charts because there's no point right now. There really is none. Simple matter, data comes out good, Fed comes out good, we're going to get continuation. The end, I'm not going to overcomplicate it. I'm not going to give you any snake oil. I'm not going to sell you on nothing, right? But I'm going to tell you some of my favorite picks right now, okay? And we're going to go over a few picks that we've gone over. Number one, I'm going to go over Target. If you've been here since last week, congratulations, you're a winner, okay? Target, where did we get this bad boy? Congratulations, guys. Congratulations, right? I want to keep these big plays coming as much as possible, all right? I want to continue to try to feed you guys and try to get you guys in the market and educate you guys most of all. When we look at, and the women, relax. I'm talking to you too. Now, if we look here, what happened? Where did we get in? At the 200 SMA break, we pushed over, pushed up to 170, came back down. I was like, guys, hammer. This is the buying opportunity. We hit the target. Now, let's say you missed the video. Right? What do I always say? Follow on Twitter. Why? Guys, I keep the evidence on Twitter, right? This is why no one can say Tyler's a liar, Tyler's this, Tyler's that. You can't because I don't lie. I'm the most honest guy out here. Win, lose, I've showed you my big losses here plenty of times. What did we say? January 27th, perfect BRB, break, retest, bounce off the 200 SMA, 172, then 177. Where are we at right now? 172. Target one hit. We're working our way back up, and we have another gap up here. Definitely keep an eye on it. Still like Target, still very bullish. You look at Costco also. This is my runner-up play. You're at 510. When you broke this, you were at 500. Target here's 520. Yeah, huge level. Love it. Now, next play. I'm going to tell you right now, AMD. AMD just had earnings. We can go over those earnings if you would like. And as I bring those over, just bear with me. When we look at AMD earnings, I think we need to be talking about a few things here, okay? Okay. If we look at AMD earnings, you can see, I'm bringing you over from Discord so you can see AMD earnings, they beat expectations on EPS and on revenue. The big thing is going to be their acquisition they just had. They had an acquisition like 2 quarters ago, and so you want to see how they're doing on that side of the business, and it's supposed to bring in like a lot. I think $2 billion per quarter increase of revenue, and so that's what we want to see. And so you can see they're going year over year, increasing a lot, and so you're still seeing this really good growth in the chip sector, even despite quote unquote a recession right now. Okay. So we need to understand that. That's why I really like them. And people saying, guys, the gaming sector is down. Spoiler alert, these companies aren't making the chip, semiconductor companies are not making their money from the fucking gaming industry. So if you think that, crumble your idea, your thesis up, throw it in the trash can, get your head out of the toilet and understand and look at some of these earning statements, okay? Again, I'm trying to educate and help you guys as much as possible. Yeah, I might be stern. Yeah, I may be a little direct. But look, I don't want someone lying to me when it comes to my money and how I view the market. And I just want to give you guys the same respect that I want when it comes to when I'm looking at the market. So let's dive in a little bit deeper. Now, what you got to do on some of these charts, in my opinion, is you got to zoom out. Zooming out is rule numero uno. When we go to the weekly time frame, one, AMD is beautiful. One of the best. Sorry, someone pissed me off, obviously, and I drew a for instance for him. Anyways, so when we look at AMD, what are we looking at here? Very clear. This is our clear demand zone. We talked about this a long time ago. It's been a great buy since. Everyone in Discord was notified about that. But this is ultimately like our big level, 75. And we've been battling there for some time. Here on the weekly chart, I don't find it coincidental that you're bouncing and holding that level and mounting it now. Now, the big level we need to be watching going forward, getting over 79 and 80. I'm going to tell you right now, based on liquidity and where we're at on AMD, if you can mount above 79 and 80, I believe you have room all the way back up to 100 to 105. For myself, if we come out with a good viewpoint from the Fed, I'm going to look to start positioning myself for in the money. I keep saying this. I said it 3 weeks ago, right? I said, people were asking me, what's the play? What's the swing? What's this? What's that? I think if you're going swings on options right now, they're dangerous because the volatility back and forth and people are getting scared of their positions. It's happened to me. So what I've done recently is started switching over to in the money positions with some time on them, right? I'm going in with more equity. So hypothetically, I'd be going to some of these swings with about $4,000 to $6,000, right? Now, I'm looking to maybe make, let's say 70% on an option. Right? 70% of $6,000, boop, 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 cross the T, dot the I, about 4,200, right? That's about what we're looking to make there. However, what I've done now is I've upped the overall amount that I'm putting in, go to deep in the money positions, and they're going to move slower, but I'll still make the same amount of equity that I would make from something like a riskier out of the money option, but I'll be safer and be a little bit more calm holding that position overall. So I might enter a position with, let's say 10,000, but I'm okay because I only need to make 20, 30% on that to make the same amount, right? Obviously 42% would be the direct number, but giving you food for thought or an instance, okay? So that's been my strategy lately. And people might be like, Tyler, you're lost in me. I'm trying to gamble and make as much money as possible. Again, people, education. That's what I'm trying to do here. I'm not trying to tell you what you want to hear. I'm trying to tell you what you need to hear. Next one. This one's, it's like the Godfather. I've been talking about Boeing for, I kind of need to get off set. I need to take a walk. I need some water. We need some water here, boys. Gotta hydrate. When we look at what's happening on Boeing, it might be one of the most beautiful, most bullish stocks in the market, basically for the past 3 months. What have we talked about with Boeing? And we've looked at this trend. This is the 1 week chart going back to 2019, clear downtrend, right? Boom, we broke it. Remember, we traded this one. We traded this one up to our target around, I believe, 200, 190-ish. Now, I kind of can't believe it. I kind of can't believe it. We're getting some, it's a bull pennant. That's what it is. There's no denying it. Let me actually go down to around the 4-hour chart to give you a better visual. But she is gorgeous, people. She's gorgeous. Boeing is trying to get the breakout. In my opinion, my opinion, what I'm looking at here, I'm looking at the range of 221 to 220. Boeing has been dominating when it comes to our backlog of orders that are coming in specifically from China. Again, what's been one of the big things with Boeing? We keep talking about it. China's reopening, China reopening. And they have been on Boeing's waiting list. And they got Boeing stacked to the brim with orders. So I definitely think Boeing has potential. And that's where I'm looking if we break out of this here on the 4-hour chart. Definitely swinging 221, 220. And the monies are my position there. But again, the best play coming up right now is if we come out with decent Fed minutes and we come out with a decent Fed talk, it's AMD, people. I'm going to tell you, it's on the top of my list. I don't care where we open up tomorrow. It's AMD, right? All we need to do, get above 78, 79, and we're looking to ride this boy to the promised land, call it Moses, get the staff, split the Red Sea, and watch the Egyptians, the short sellers behind us, get clapped. Okay, so that's what we're looking at today. That's what I'm looking for. And again, today's video not super long. I gave you my opinion on the Fed meeting, gave you my opinion on everything in between. And again, I think you look great. We're just sitting in the channel, trending up, got a bull flag on the daily. I don't know what else we really could want on the market. Technically, I believe you're set up for continuation. Fundamentally, I don't think the Fed's gonna kill us. They could. That's why I'm pretty liquid right now. I am pretty liquid. I keep saying it. You want to be liquid at least until Thursday, most likely. But that's what I'm looking at. If you have questions, comment down below. Video coming out tomorrow, live every day, 10:30 a.m. Central. Have a good one, traders.